Hello traders, Crude here with a market update. Okay, so we have had a wild ride in crude oil so far this week. Absolutely unprecedented, historic volatility. No doubt fortunes have been made and fortunes have been lost. Look, it all kicked off obviously on Monday on the open. Traders were fearing the worst case scenario, and with good reason. All the news on the weekend was negative in that the Strait of Hormuz obviously was closed. Oil infrastructure in the region had been hit, and then also Gulf states had actually stopped production because their storage capacity had hit its limits. So yes, we saw crude oil spike and gap straight through $100 to print a high of $120. Before the cavalry arrived. Crude oil above $100 and anywhere 120 plus, especially if it's a sustained price, so it actually sits there for a while. Can cripple global economies and potentially also crash markets. So yes, the cavalry arrived. And we saw first that the G7 was planning to release some of its strategic reserves of crude, around about 400 million barrels of crude. So yes, that did get crude oil lower immediately and sub $100. But crude traders was looking at that as pretty much just a band-aid, because really it didn't fix the strategic reserves, the supply issues, and obviously the war still raging. But then the big guns came out later. Obviously, Trump came in and said that the war was going according to plan, even better than planned. Their 4 to 5 week campaign, so they were ahead of schedule, and that the war would end soon, and that they would open the Strait of Hormuz, and potentially there'd be even military escorts for the oil tankers. And that did tank crude in a big way. So for crude actually being up over 30% at one stage on Monday, which is biggest one-day record rise, to erase that whole gain and then actually close negative for the day. All day yesterday, crude, after printing early highs of around $90, struggled for the rest of the day. And then US session came in and it got absolutely belted. And there was reports that there was actually some forced selling, some liquidation, which saw crude actually go through $80 and print a low overnight of around about $76.50. But then again, and this is a very headline-driven market, and you don't know when those headlines are coming out. There was news that Iran was starting to mine the Strait of Hormuz. And if obviously they do that, apparently they've got about 6,000 sea mines, that could stop traffic for months. So market obviously then took crude, spiked it back up, and crude did end up closing positive for the session after having a good 10 to 15% sell-off. So it recaptured all of that. So look, unbelievable volatility, and it's been both ways. And even in the one session, we've seen huge up and down spikes. So it is a very, very dangerous market at the moment. But look, the key takeaways for crude are, one, is that there is still a lot of uncertainty in the market. No one really knows whether to believe Trump that this war is ending anytime soon, and whether or not Iran actually agrees to it. So when you have uncertainty, obviously you're going to have a premium built into the price. So look, it's going to take a lot to get crude meaningfully lower. And to get it back to those prices where it started the year, down below $60. So literally it would take, obviously, the war to be over, and obviously a lot of those supply bottlenecks issues sorted out, which obviously could take some time. So the bias is certainly to be buying crude on any dips at the moment, just for the simple fact is that we're probably not going to be seeing levels even sub $70 for some time. And if the Iranians did mine the Strait of Hormuz, then we're going to be seeing oil well back above $100 and probably take out that $120 high. So yes, very dangerous market at the moment, but I think bias at the moment is buying dips while there's still so much uncertainty. In other markets, US equities, S&P and NASDAQ have been pretty resilient through all of this so far. For the last 5 months, they have been range trading. S&P literally has been range trading pretty much 300 points, 67 even, up to 7,000, which has been the record highs. It's quite amazing that even with all this geopolitical tensions, the war, crude spiking, still couldn't really decisively break the bottom end of that range. And we've seen S&P now rally back up, and NASDAQ with crude coming off $100. So again, it says a lot about just how bullish these equity markets have been. That traders really don't want to give up their positions, and we haven't really seen any big red days on the back of this. So yes, it's showing amazing resilience so far. It's not to say that we won't break the bottom end of the range, but I think it's going to take a lot, an escalation of what we've seen so far. But maybe the Iranians mining the Sea of Hormuz could do that. So let's see. On the currency front, one currency that is a standout, it's been a standout overnight, it's been the Aussie. Aussie is the strong link in the currency space. It's something that we have talked about quite a bit. For the simple reason is that the RBA has been the first, big central bank that has restarted the tightening cycle. It's got the highest, cash rate compared to all the other central banks. It's got an inflation problem here in Australia, where inflation's back to 4%, and obviously with what's going on with crude, we're going to see inflation spike up even higher. So we've got a market here at the moment that is pricing in another 60 basis points of rate rises by the RBA before the end of the year. So taking maybe the RBA cash rate back up to around about 4.5%. So it looks as if the RBA certainly, the interest differential with the other central banks is going to widen even more. It is a huge tailwind for the Aussie. There is an RBA meeting next week. Look, they're not going to. There might be a surprise rate hike to get in front of this crude spike, but it looks as if the next rate hike will probably be in April. But regardless, it'll be a hawkish meeting, and it seems as if traders are starting to price all of this in. So we saw Aussie up 2-3 year highs overnight, up around about 71.70. And yes, it is definitely a buy on dips. Tonight there is some important economic data coming out of the US, and that is the CPI data for February. For the headline number, market expects that to come out around about 2.4%. So pretty much on par where it was the previous month. And same for the core number year on year. Market's expecting that to stay stable at 2.5%. Now, this crude spike really didn't happen until March, so those February numbers will not take into in consideration what's happened to crude. We're only really going to get that feeding to CPI in the March numbers, so we'll get those March numbers in April next month. So that will be a key focus to the market when they see those numbers. But one thing the market certainly doesn't want to see for US CPI is if it starts unexpectedly, we see those numbers tonight come out above expectations before we see the crude spike filter into CPI next month. So no doubt that could cause a bit of damage to markets tonight if it came out above expectations. So anyway, something to watch out for tonight. But the main focus for markets obviously is what's going on with the war in Iran, and it is not the easiest thing to trade for the simple reason is that it's super headline driven. A lot of confusion out there, and you do not know when those headlines are going to drop. So certainly, you've got to be wearing stops on all your positions. And good luck, and we'll check back in with you shortly.